Ladies and gentlemen, welcome back to the High Performance YouTube Trading Channel. I am your host, I am your coach, Joshua Salvetti, and today we are going to be breaking down a systematic trading process, right? A simple, single, and strategic way for you to get in and out of trades successfully. All what I ask is if I add any value, right, to your trading, that you would smash that thumbs up button and subscribe for more content. So now, let's get into the video. All right, so today's video, we are going to be breaking down the importance of process development, right? And I got this wonderful quote from Carmine Rosado. It goes something like this: I do not trade to make money. I trade to follow my process that makes big money. See, now this is a topic that all traders need to hear. It is definitely a game changer. It is definitely super valuable, okay? And basically what that is a systematic trading process that you can use day in and day out, every single day, that will give you repeatable results, right? And now the importance of that, right? Because I've been a day trader for a while now, and you need an edge, right? Your edge is what makes you money, right? And though it may not work 10 out of 10, I guarantee you, you will be more successful than not. And if you can trade with a probabilistic mentality, right, like that I covered in one of my other courses, you will be successful. So what we're going through today is a systematic trading process, right? So number one, it's 5 key factors. So number one is observe market structure. And we're going to be breaking down what is market structure and what it's telling you. Number 2 is identify your areas of value, right? Which is supply and demand, right? And I got a couple other ones I want to throw in there, like end of day, pre-market high, pre-market low. Number 3, to recognize an entry indication, right? A chart pattern that's going to help you get in and out of trades and to spot the high probability market reversal right before your eyes, right? Number 4, capture the market imbalance, right? And we're going to break down how to do that, how to capture the full trade, why you need to capture the full trade. And then number 5 is my personal favorite, what I like to call T metrics, right? Trading metrics, trading statistics, which goes something like log, analyze, and recreate. So let's break right into that. Okay, so how I want to break this down is today on Tesla. So today on Tesla, we had a lot going on. So first, I want to break this down, what was going through my head, how I traded it, why I traded it that way, step by step, so that you can understand, right? So number 1 is observe the market structure. So the way I like to do this, right? And so every single day, I usually got my eye on SPY, QQQ, Tesla, Apple, and I like to see what the overall market is doing, right? So let me just real quick pull this up for you. We're going to check out the S&P 500. So basically the importance of market context is kind of understanding who's in control of the overall market, right? Are you approaching demand zones, right? So what was going through my mind, right, as far as market context, is we are in a downtrend since 2021, right? Almost a full year now, we have been in a downtrend overall market. And recently, we had a rip up into this downward trend, right? Otherwise known as resistance, right? Resistance, support, support, resistance. So every time, right, we got 1, 2, 3, 4 times. Every time we've touched this, we have rejected. So instead of predicting or assuming a breakout here, I am going by prior past price movements, where every time we touch this trend, price reverses, right? So overall, I am looking for a spot to go short unless the market tells me different, right? And then pre-market, let me just pull up my pre-market data real quick. Pre-market, we had an insane sell-off, right? So the importance of supply and demand, and I know I break this down in my course, is how you validate a supply or demand zone is a violent sell-off or a violent buy, a violent change in price, right? So we had an insane sell-off this morning. So my idea here is to wait for a chart pattern within a zone to make a trade, right? So number one is market context. We are in a downward trend. We had a massive sell-off. So now I am looking to go short. Number two is identify your key areas of value. So what I am doing here is looking for supply or demand zone. So while I was looking at Tesla and the SPY, right, and the S&P 500, I noticed, right, that we had a heavy sell-off, right? So that's a heavy supply zone. So if price could enter pre-market high sell-off, you gotta go short, right? That is my goal. That's my trading plan, right? One of them. If this happens, I will shoot for it because I know I have a high probability, I have a high chance that price is going to reverse here at this 196 area, right? Or 195. So my goal today was to take Tesla short if we entered into this price, right? So the reason I went with Tesla today and not the S&P 500 is because if you look, right, this is what I love about market context. So let's just pull up the 1 minute on each. So as the day was playing out, 9:30, ding, 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 here comes the bell. Tesla had a lot more strength. And what I mean by strength is Tesla was moving towards its end of day in pre-market high a lot faster than SPY was, right? So you can see SPY had like a 50% retracement here around 937 when Tesla was already touching its pre-market area of value. So now that I have identified market context and I've identified my supply zone, I am now on number 3, which is identify a chart pattern within a zone for confirmation for a market reversal, right? Because I know I have a high probability of catching a valid trade with a chart pattern in a supply or demand zone. Guys, I cannot make it more simple. A chart pattern within a supply and demand zone is my edge. That is what works for me. That is what creates value. That's what pays me. That's how I am consistent, right? And I need you to understand that and validate that. If you have any questions, ask, shoot. We'll talk about it because, guys, I'm telling you, this is what gives me confidence in my trading. This is what gives me conviction. This is where my edge is present. So now that I want to go with Tesla because SPY is not in a valid chart pattern, it's not in a valid supply zone. So what do? I just take it out, right? So now I'm focused on Tesla, and this is what the 1 minute looked like. So we had price ripping up into here, and this was clutch, right? So this is something I want to go through. So number 4 is capture the market imbalance, right? Or shoot for your target. But let's just talk about number 3 real quick. We have end of day at 194.75. So I'm looking for price to not be able to hold above 194.75, right? And we started a lot below end of day. So I'm kind of still collecting a lot of data as far as if we start below end of day, what the probability is of it being a bearish day versus starting above end of day, what the probability of it is being a bullish day, right? I'm still collecting that data, but one thing I'm starting to notice is if price drops under end of day during pre-market, look to go short. That kind of adds to my market context, my market structure, where if we drop below end of day, wait for price to enter around end of day and look for a chart pattern. So that's exactly what happened today with Tesla. We ripped right up into this end of day and then right into my supply zone and had a perfect retest here, right? Rip, and I'm not in my trade yet because this is not a valid confirmation. We rip into 195.46, we reject it, and then we fail to make a higher high. Key indicator, market screaming to you going go short, right? So what do? I hop in the 190 puts for the ride, right? And we take her down to exactly where the market opened, right? Which is what I call the market imbalance, right? Because market open can be a demand zone, right? There can be buyers there, and there was buyers there prior. So prior price movements is telling me there's a large buyer here, get out, right? So that's exactly what I did, and that's how I captured the market imbalance. Another thing that's extremely important is capturing the full market imbalance, ladies and gentlemen. You have to. It's very hard. I struggled with it for a very long time. I still struggle with it, but one thing I'll do is at VWAP here, I'll scale out, right? Lock in profits and look forward, right? And that was, and then we had a perfect rejection candle here, and she reversed. So real quick, I just want to show you what those options looked like, right? So, and how I do that for anyone that wants to know, as you go over here to options, you type in Tesla, right? Let's see if we could get her to pop up. Let's see here real quick. Tesla, there we go. So I went with the 190 put, right? Which is right. Let's see. Actually, I went with the 195 put, right? Which is right here. Remove, because I like to stay close into the money on 0 day. So these options went from right here at $141. These went up 170%. Huge, guys. So that's 170% return on your investment by capturing this market imbalance, right? Super powerful stuff, ladies and gentlemen. So back to the trade, we have captured the market imbalance. Now the most important thing is number 5, which is log, analyze, and recreate. So basically, ladies and gentlemen, I'm working on an Excel spreadsheet that I want to give to all the traders out there in the high performance trading community. But you have to log your work. You have to log your trades. It is the most vital, it is the most important part of trading, because you need to understand what works and what doesn't work. This is a part of the probabilistic trading mentality. It is 90% of your success is logging your trades. So in this trade, what I did was log this. I screenshot it, put it in my Microsoft OneNote, put where I got in, where I got out, the options I bought, log my percent, log my P&L, and put it away. I have over a year of trading data, and it is extremely valuable. So that pretty much wraps it up for this lesson. I hope you guys really enjoyed it. Like I said in the beginning of this video, if I add any value to your trading, please smash that like button, subscribe for more video content, and follow me on Instagram at The High Performance Trader. I will see you in the next video.